Good morning, one and all, or good afternoon, even. My name's Ray. I'm from Next Forex Trade. Today is the 8th of October 2019. It's a Tuesday. Just gone 12:30, or just at 12:30 in the UK here. So, as per usual, let's crack on. Let's just see what's going on in the Forex market today. You can see at the moment I've got two positions, or I'm in two currencies at the moment, three positions overall, but in two currencies. AUD, USD, Euro, Swissy. We'll come to these a bit later. So yeah, these are doing okay at the moment, and we'll cover those in a bit more depth later on. But let's just crack on with what we're seeing in the market today. So starting with AUD CAD. Again, signs of bearishness here. In fact, I won't spend too much long on this because there's much the same structure that's in the AUD USD. But basically, we can see in this that we've got lots of bearishness, lower lows, lower highs. Clear signs of resistance here where the price had previously found resistance, some zonal resistance here. A lower high a few days ago, a couple of days ago, Friday that would have been. And the price is in an overbought area in our standard deviation, giving a good sign to be short on this. The main problem on this was, for me, the 4 hourly. There was a bit too much context in this move up here in the retrace. So this has some kind of bullish intent, if you like. So really breaking the lows, this previous higher low here on the 4 hourly would be a more kind of conservative type of trade. But as I said, I'm going to talk a bit more about this type of structure on the trade that I'm in on the AUD USD. We'll come to that a bit later. But yeah, bearish on this. There is scope to enter this. Stops would be above this level here. One-to-ones would take to about this level. But I wouldn't be in this because I'm already in a trade that's very similar. So we'll move on to the next one. So here, AUD CHF. Let's have a look at this. Daily and the weekly obviously as well be very bearish on this, so lower lows, lower highs. There is context to the downside as well, low lows, low highs, much like the last one we saw. Same kind of problem here at the moment where there's, in the retrace, it's finding support as it creates kind of higher highs and higher lows. So it's finding support off the standard deviation. So again, the kind of reference point is it breaking this previous higher low here to give context to this downward move continuing. But the 4 hourly and the hourlies on this are looking very good. So yeah, definitely overall very bearish on this. You could aggressively enter this now with a stop above these type of levels on the daily. But the more conservative trade will be waiting for it to break these lows here. But definitely, I think as it is at the moment, because of the nice bearishness we're seeing on the 4 hourly, other time frames, there's good scope to be short on this. If you wanted a more kind of better value for money trade, you could use the 15-minute price action, wait for a pullback to our standard deviation, see a reversal off of that, and then short as it moves past the low. But yeah, I can see enough value in this to potentially short this as is. Stop above these highs here. 1-to-1 would take you to run these levels viably. 2-to-1 approaching these lows here. But as I said, the more conservative trade would be waiting for this support here to be broken, the price to break it and then pull back. So on the lower times, that would be these levels here. But yeah, there's scope in this. Definitely, 1%, 2% potentially as well. It's a good setup. But like I said, I'm in something at the moment, so I wouldn't be looking to open any trades personally at the moment. AUD/JPY, bearish overall. Wouldn't really be looking to get on short on this at the moment, though. There's too much support that you'd be selling into. Want to avoid selling into support. You want to sell off of resistance. So there's better stuff out there. So I would immediately discount that because of that. This is it's great bearishness overall, but just too near support. Needs a bit of a pullback before potentially shorting. So this is one I'm in, AUD/USD. We've got some signs of bearishness here on the daily. So I've entered this. I've entered this with 2% overall. You can see you've got two positions in this. So this move here is the same as this on the 4 hourly. There's the same problem here in that this price action in the retrace could find support off of this standard deviation, and previous areas of support that's horizontal. Oh, let's get rid of that 1 sec. Let's just use this one. So this area here is a bit troublesome. So this goes back to previous kind of zonal resistance, zonal support. So the price, if it does find support here, it's going to be, it's not good for this trade because I want it to break that support and move lower and approach these lows as we're seeing on the daily. So if it does continue with this bullishness and kind of attack these previous highs, I could get stopped out on this. But overall, the potential reward and the probability of the trade, I'm happy with. I've got my stops outside of the standard deviations. As you can see, these two red lines here, outside of our standard deviation in the downtrend, also above the lower high as well. So it's sensibly placed. I've taken enough consideration of what the risk is to take positions on this. And we'll just have to see how this pans out. At the moment, where are we? So AUD, USD. So over £7 on this one. So yeah, it's about £15, minus £15 in terms of loss that it's carrying at the moment, but not too worried about that just yet. The time to be worried would probably be if these highs here, come on, what's going on today? These highs here on the daily start getting taken out. So we can see that there's some price structure potentially producing lower highs and lower lows down here. But if the price persists and takes out this previous higher, well, in terms of this higher high, right? So this will give more context to the price moving like this and breaking to make new highs, then I would consider taking my stop losses to, my take profits to break even. Leaving my stop losses where they are, they're fine. I mean, they're sensibly placed. But if the price action doesn't do what I want it to do, which is produce lower lows, lower highs, then I would look to protect my capital just to break even and potentially look to, wait for a more opportune time to re-enter, if at all. So yeah, AUD, USD looking good. What else we got? Again, if you're finding the videos useful, always just let me know, give me a thumbs up. If you're not subscribed, do follow, and so you can get updated as these videos come out. So looking at CAD CHF here, very choppy, sideways market, not really the kind of stuff that I'm looking for, not good value in that. Good way to lose money, in my opinion, and don't want to lose money. So here, CAD JPY, bearish overall, but it's just too near the mean of our standard deviation. It needs to pull back and find some value, approach these previous lower highs here, the upper edge of our standard deviation, and look for reversals off of that. So not looking to get in on that type of action. CHF JPY, I'd be bearish on this overall, but at the moment I'd want to see a bit more value. It's just too near the mean again of our standard deviation, too near these previous lows here, which is giving us a double bottom. I want to see it pull back more into the upper edge of our standard deviation here and then show signs of reversal. Ideally encounter some resistance at previous highs, previous lows. So possibly, just looking at the way this is developing, might be about this kind of level here, right, where we've seen these previous highs here, these previous lows, pull back, and by the time that happens, because obviously this progresses, the standard deviation is going to move lower, we would likely see a lower standard deviation reach these type of levels. So yeah, maybe later this week, at the end of this week, might see something like that, but not tradable just yet, so pass on that. Euro AUD, yeah, still bullish on this, still viable entry on this. My main problem with this has been the swaps that would be needed to be long on this. They'd be quite expensive with most brokers. the stop loss would need, well, there's two ways you can play this. Well, there's a bit more context to this now. You could go with the most conservative stop loss, which is below this previous higher low in this bullish movement here. So you could place a stop there, and that would make sense because you've got your 1-to-1. This is progressed enough now to consider being long on this. It's mature enough. So your 1-to-1 going long on this would be around this level here. So it's before this previous high, which is good. So you want to take profits off before the previous high. Or in my opinion, that's where I prefer to take profits off, before the price reaches the previous highest high in an uptrend. So that would stack. You could trade this more aggressively and use this lower high here on the daily. If we zoom in, this one here, which is the same as this one here on the 4-hourly, or this one here on the hourly. Now, that's slightly more aggressive because it's inside of the standard deviation of the daily. All right, so because you'd be placing your stop loss here, it's not as conservative in that it's clearing a lower high in the context of it's clearing a higher low in the context of the 4-hourly, but not on the daily. And generally, the more sense that your stop loss makes on multiple time frames, the better. So you've got a less risky type of trade. So here it still kind of makes sense in the daily, but it's not ideal because it's only clearing, the price could still retrace, so pull back to these types of levels, not break the previous higher low and then continue upwards. But because you've put stop loss there, it means it's just a bit too tight and you'll be right overall in the move, but you're wrong because you've been stopped out too early. So it's an option. You could trade this aggressively. Obviously means that you've got a bigger position size in, so your lot size is going to be much bigger for each pip than if you were to put it this level. And it would mean to reach your 1-to-1 reward to risk, it would be less the distance. So entering here, it's about 240. It would take your take profit on a 1-to-1 reward to risk to these types of levels. So, that's way before this previous high. So, it's tradable. You could consider, like I've said before, my risk profile is between 0.5% and 3%. Something like this, you could go for 1%, or because of the added risk, go at 0.5%. That's the way I would trade this if I were looking to trade something else. But I'd pass on this for now. Like I said, in trades already, don't want to add more positions unnecessarily because of the effects of currency correlation and added risk as well. So I'll pass on that. So next one. So this is the EuroCAD. Nice signs of bearishness on the daily that fit neatly within our standard deviation. Just tidy this up a bit. So we see nice reversals off of our upper edge of our standard deviation. It's finding resistance as well around that level. Horizontal resistance we can put in. Just took that off as well, so put it back in. So these types of levels, the price could find a lot more trouble moving higher than this. So there's that on the daily. That's good in the case of potentially going short on this. 4-hourly, well, we have just captured the same move in the 4-hourly. It's the same as this here. It's just more contact points or more data points, if you like. So it's the same story that we're reading. The moment on the hourly, it's not really supporting it really, because we need to see some signs of bearishness, and you can see at the moment it's hitting resistance here as it's come into it. It's bang, 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 loads of times hit it, which is previous support. So there's good reason to believe that the price is going to find much harder moving higher than that. But as of yet, we haven't seen any bearishness in this. So really, for this to be a viable trade, what I would want to see is the price break past these previous lows here, break this support and move lower and then pull back, giving context to a standard deviation from the high to the low. and then that would read into the story that we're seeing on these different time frames, allowing for a short, but that's not there yet, so I would pass on that. So this is the other trade I'm in, Euro Swissy. This is going okay. This is going into profit. So what's this at the moment? Just under about £55 after swaps and comms. So this was based on the daily, giving lower highs and lower lows. Just see, yeah, okay. There was enough context in this to have a stop above this previous lower high, what I was deeming as a lower high. It was also outside of our standard deviation, just as well. So it makes sense on those two kind of criteria, and also there was some horizontal resistance as well from these previous highs, also previous support. So stops in a sensible place. You can see my take profit here before these previous lowest lows that the price has made. So that is it's a probable type of trade. It seems achievable. The price action on the 4 hourly as well had broken price structure. So where this was making higher lows, you can see here, it stopped doing that and now started to make lower lows. So this was, if we're looking at this to here as higher highs, these higher highs and higher lows, when this was the previous higher low, the price moved past lower than that and it started to produce a lower low. It's making a new lower low now, as well as these higher highs. So that price structure is kind of being invalidated and gives more context to this now, with these being lower highs and lower lows. You can see how it's fitting within our standard deviation. It's just bouncing in between it. So this gives us some context to be short on this. The hourly, validates that even better. Now, to hit my profit target, it may still see some retrace if this does continue to move lower. I'd still be okay if this price were to pull back. In fact, I'm anticipating that it's gonna pull back, before moving lower. So just being wary of that. I mean, I've got my my entry now around a kind of key kind of support area here, which will turn into resistance if the price comes back. But this is the thing. I mean, you can see it's in profit at the moment. So this could go back to, zero in terms of what the profit is, but I still wouldn't be worried about that because it's still within the context of the price action that I'm anticipating. So there's no reason to be worried. Now, if the price starts making new higher highs, so breaking these kinds of levels or these type of levels here and moving higher, then that would be a time maybe to consider moving to break even, not moving my stop loss, moving my take profit to break even. But nothing to be worried about at the moment. This is going to plan, and it's just realizing that price never really moves in a straight line as well. It's always going to oscillate. So I'm happy to hold that position for now. I don't know if there'll be scope to really scale into this, to add more positions to this. So this will probably just be a 1-to-1 if it does hit take profit, because this, the daily is okay. It's not perfect in terms of price action I'd want to see to allow for scaling in. But yeah, we'll see how this goes. I'll come back to that tomorrow and update you. Euro GBP. No, this is bearish overall. This is probably one of the good examples of why I say when I look for a reversal candle or signs of reversal, I wait for the price to move past the low of the previous candle. It's kind of a safety feature. You can see that didn't happen in today's candle. In fact, it's broken through this resistance and it's moved higher. So it's going to be a while before this is going to be tradable again, in my opinion, because either this bullishness is going to continue and it's going to start creating higher highs, higher lows, or this is going to need to give a bit more context in terms of potentially reversing. So hit a reversal candle and move past the low of that. But if we just forget about this candle from today and look at what I would have been saying yesterday, I would have been saying, right, okay, as the price, let's zoom in actually, let's take this off. this off. I can't do it one candle at a time. Forgotten how to do that. See if I can get it. Yeah, I think that was it. So yeah, so yesterday this would have been the information I had. Only this, right? Well, sorry. Looking at it yesterday, this would have been the candle that I would have seen, and this would have been forming. So what I would have been saying yesterday, if you look at yesterday's video, is okay, yeah, this is a nice downtrend, lower lows, lower highs. It's interacting with upper edge of our standard deviation. What I'd like to see is the price move past the low of this previous candle, and for that bearishness to be seen in the lower time frames as well. Now, yesterday's candle ended up like that, and if I had seen that and been doing this video earlier, I would have been saying, right, okay, nice signs of bearishness. It's hit resistance, these levels here, that's fine, good signs. But I'd want to see it move past the low of the previous day's candle and that bearishness in the lower time frames as well, and it wouldn't have happened. So it's a safety feature that the criterion for the criteria for the entry wouldn't have materialized, so you don't enter the trade. And that's just one of the beauties of using you know, what you know about price action and waiting for confirmation on the various time frames before entering a trade. You don't want to be too aggressive and jump on something before it's happened. If you wait for the market to show its cards first of all, before preempting it too much, then you've got a much more probable type of trade. And this is a good example of that. So let's move on. Euro JPY, bearish overall, hitting support at the moment. No, it needs to pull back and find some value before shorting. So here, sorry about that. So this is Euro NZD, bullish overall. No, it's just too near the mean of our standard deviation. This needs to pull back, find some value, these kinds of levels here. So pass. This is interesting, but not interesting enough. There's probably better stuff out. Well, there is better stuff out there. Bearish overall. Nice signs of resistance in previous days. I mean, 1, 2, 3 days where it's just struggled to move higher than that previous resistance, which was also previous support. So, yeah, you could consider looking for shorts on this with stops above this level. But the problem for me is these lower time frames haven't really shown their cards yet in sides of bearishness. They haven't really started to produce lower lows and lower highs. Specifically, if we look at the daily, then what would need to be done is this support here would need to be broken, move lower, pull back to allow for a potential entry. But yeah, just need to wait and see on that one if that materializes or not. GBP AUD, bullish on this overall. Candle coming down, hitting our support almost bang on in terms of the horizontal support here that we're seeing from previous levels here. And as well as our standard deviation. Might even be a Fibonacci retrace in there, maybe 23.2. Let's see. Yeah, it's about 38 point. Well, let's just change these around so that makes more sense. So this is a 38.2 retrace as well, roughly, give or take, on the daily. Now, it's just information. Would I trade that? No, not really, because what I want to see on the daily is a reversal candle. So a very small type of candle, something like this candle that we saw here. Right? That's not technically a reversal candle, but it's all to do with context, really. Basically, this candle here is just too long, and we want a smaller candle so that in the next day, as the price moves past it, it allows for a stop loss, a much smaller distance to the stop loss. If we were to use this as a context, let's say the candle ends the day like this. It's great that it's found support off there. It's great that it's also, hit that support bang on in multiple confirming factors with the Fibonacci retrace, with the horizontal, with the standard deviation. But the problem is the entry would need to be up here. The price would need to move past the high. So these lower time frames we need to start cycling up first of all. And the price would need to move past the high to trigger the entry. And an entry with the stop loss that far away. It's just too wide. I mean, it was still kind of stack because your take profit would be before these levels, but it's just in the context of this move here. That would be just too wide a stop for me anyway, to make a one-to-one profit. It'd be much more value for money if this type of candle here were to materialize, you know, here, allowing for a much tighter stop loss with a much bigger position size, giving more scope for profit. If we had this type of candle here, that, you know, the entry would be around this level, meaning that your potential profit before the previous highs is probably going to be about three, possibly even 4 to 1. Whereas here it would only be 1 to 1. So this doesn't offer a good value for me at the moment, even though some of the cards are, you know, it looks like it's finding support. It's just information. It's not tradable for me. There needs to be, you know, better setup in terms of what the candles are doing. So let's have a look at the GBP CAD. No, I think I would have mentioned this in previous videos. It's just limbo at the moment. There's too much context to this downward trend with lower lows, lower highs, where it's interacted with our standard deviation and moved back to move lower. But also at the moment, this as well is just a bit too difficult to read. So the price retracing in terms of this move is finding support off of our standard deviation as it moves up. So this could continue to bust higher and make higher highs and higher lows. So really, this area of support here would need to be broken, giving more context to our standard deviation going from high to low rather than low to high. So pass on that. So GBP Swissy, another example why it's good to wait on confirmation. So, you know, had I seen this earlier in the day, seen this candle, then I would be thinking, right, if the price moves past the high of this, then that's a good entry. But it didn't, so you'd be safe from that entry because the price has moved lower, broken support, key level of support in terms of it being the standard deviation, the horizontal support. It's busted through that. So this, although, you know, looking for bullish signs is still looking for that, it's not a good time. It's not an opportune time to be on the back of this at the moment because, well, in fact, it's that same issue that we were looking at in the other one. Actually, there's context to this, and there's context to this as well. So this is complete limbo for me at the moment. So I'll pass on that. So yeah, look for better opportunities. I've already discussed some, so rewind the video for those. This here, no, similar. I mean, it's better that it's broken through this support more convincingly of the standard deviation and the horizontal support. So it's broken through that, giving more context to this downtrend continuing. But for this to be tradable, it would need a pullback to find some value. So, you know, these would need to materialize and then pull back to these levels and seeing reversals off of these types of levels off the standard deviation as it comes down. And even then, the stop's going to be quite wide. It would need to be above these highs to make sense on multiple time frames, so above the daily lower high in this move. I just think there's better stuff that we've discussed that you could trade, so I'd pass on that. Yeah, same thing. This is just broken. It's been the case on quite a few of the pairs today. Broken a key level of support, what I deem key support. It's previous standard deviation low, previous low on this candle, resistance here, zonal support, resistance. It's broken through that. So I just want to see how this finishes on the day really before making any further decisions. But yeah, be looking for longs on this, but not today. No. Don't. This. I mean, this is slightly better for a few reasons. I'd be okay to invalidate this in this instance this move here and give this a chance, if you like, or this in terms of low to high, high to low standard deviation. So this move here is basically the 4 hourly here. So I'd want to see it pull back again, find some value, and you could aggressively use this as the previous lower high in terms of the downtrend. I say aggressively because it's still within our standard deviation, and I mean it would allow for a bigger entry, bigger position size, but it's just slightly riskier for me because it's still within our standard deviation channel. The more conservative trade is going for this high here, the stop loss above here, after the price pulls back, finds value here and shows signs of reversal to move lower. But yeah, having a stop at that kind of level, let's say we get an entry around there, 3, 2, you'd be taking profits off, probably bang on support there, using this as a take profit, using this as a stop loss above here. With this one here, using this as a stop, it's going to be, you know, a lot quicker to take profit. So let's say it's around these levels after a pullback, 40. Yeah, you'd be taking profits. So that stacks a bit better. So if I were to trade this, I would think the way I'd weigh this up is probably go for the more aggressive entry, so a tighter stop here. And again, this is all on seeing a pullback, right? Seeing a pullback, seeing reversals off a standard deviation. I'd be willing to risk a stop loss above this level, which would mean a 1-to-1 reward to risk, probably around these levels, 0.5% to 1% in terms of risk for that setup. But yeah, it's all based on seeing that reversal happen though on those lower time frames. So yeah, GBP USD possibly. NZD CAD. Yeah, bearish on this overall. It's good that it's finding, and we can see this clear resistance reversal off of this resistance level here where there's previous support. It's also around the mean of our standard deviation in terms of this bigger move, and the upper standard deviation in terms of this move, right, on the daily and the 4 hourly. So this move is the same as this move. So be looking for stop loss above that level. Oh, sorry. Looking for a stop loss above that level. Now the problem is at the moment we're losing those signs of bearishness on the lower time frames here, so on the hourly. So I'd want to see those lower highs and lower lows come back into play clearly. You can see the price structure's kind of started to be broken here. It's stopped making those lower lows and lower highs, and it's looking to potentially come round double top. So at the moment, yeah, I'd be bearish on this, but I would let the lower time frames dictate that. So seeing this support, which is also previous resistance here, broken, would be a better clue that this standard deviation from high to low is going to maintain. So yeah, not for today for me. I'd pass on that. NZD/JPY, no, hitting support here. Be selling too much into that support. There is some context here. I'd need to wait for this candle to close basically. So yeah, not today, but I want to see how this closes today and have a look at it tomorrow for potential shorts. So there's potential maybe later in the week for this. So I want to see this nice reversal candle look something like this at the close today. Move past the low, bearishness to be in those lower time frames as well, potentially short. This, no, this is bearish overall, but the lower time frames here are quite bullish. High highs, high lows, and yeah, want to see a better reversal off of this level. So I pass on this today. I want to see more bearishness, basically, on these lower time frames to be telling the same story as the daily is. USD CAD, no, too choppy. And USD CHF, bullish, but wrong type of candle. Would need a reversal candle off of this type of level. This candle's too big, similar to the other one that we looked at like this. Need a smaller candle for entry. Need this to close first of all, and then we need a better candle for the context of entry. So I'd pass on this. It's not looking too bad actually. It's a bit messy on these lower time frames. There is better stuff out there. Yeah, it's broken up. Yeah, setup on this is okay. I think there's better stuff that we've discussed though to be short on. So I would pass on this personally, but basically be looking at stops above this type of level, previous lower highs. 1-to-1 will take you to about these types of levels, 1-to-1 raw to risk. But these lower time frames are slightly dodgy at the moment in terms of what we need to see. There's no clear signs of like bearishness, lower lows and lower highs, and the clearer it is across the time frames, the more easy it's going to be to manage, and the more probable your trade is going to be as well. But yeah, that's it for today. Hopefully that's been of some use. Do remember to like the video, leave any questions or comments. I'm happy to answer those, and I'll see you again in tomorrow's session. Take care. Bye.